Well, the S&P CASE-SHILLER home price numbers are due out in less than an hour. Our next guest says the recent bounce in CASE-SHILLER was exaggerated and there could be a small reversal in the next few months. Jim O'Sullivan is the chief global economist at MF Global. Right next to me, Jim. Great to see you again.
Hi, morning.
Okay, so you say that this could reverse. How? Why?
Well, not necessarily this morning. I do expect an increase after seasonal adjustment this morning, but the CASE-SHILLER numbers are sales-weighted indexes, and part of what's happened, I think, over the last 6 months is that there's been a bounce in traditional home sales, non-distressed sales, and as those sales have come back, the average home price has gone up. And I think over the next month or two, as you see the recent drop in sales come out of the numbers and the share of distressed homes goes back up, you'll see a little bit of payback. But
that
why
said, discount that, though? I mean, isn't that significant?
Well, I think it's largely noise in that the home price numbers are up based on CASE-SHILLER about 3.5% over the last 6 months. So you could give back a point or two of that. But the bigger picture is that it looks like the plunge in home prices is over.
And you say that it was over with late last year.
Well, the bottom right now is last May, so it's just over 6 months ago in the data. You're up 3.5% in the CASE-SHILLER numbers over 6 months. So again, could a little bit of that be given back in the next month or two, perhaps, but you stand back and look at the number, it was down 30% previously. It looks like the big drop is over.
And over for good, because we're facing quite a few headwinds coming up.
I think so. There are always risks, of course, and you've been talking about the foreclosures and the shadow inventory this morning on the show.
And the Fed stopping to buy mortgages.
But in the other direction, despite the Fed buying mortgages, mortgage rates are staying quite low, Treasury yields are low, inflation is still declining. So you still have low mortgage rates, home prices have dropped a lot already. So when you put those two together, home prices and mortgages down a lot, affordability is quite high. The economy is turning, confidence is up, even though it's probably going to be down a little bit in this morning's conference board number, but on balance it's up. The labor market seems to be turning. So I think on balance the pluses outweigh the minuses here, and we may not get a big jump in prices, but I think the big downward pressure is largely over.
So what are we going to get then in 2010 with home prices?
I would say stable is a reasonable expectation, but I mean, of course, we'll see what happens to mortgage rates. We'll see what happens to the economy broadly. But I think even a flattening out relative to the big drag that we were getting from housing over the last couple of years is quite positive,
right.
really.
It's still less bad then for us here, at least in the housing markets. Is there real demand, though?
Well, we've seen the home sale numbers bounce. Now, some of it was exaggerated by the tax credit. You look at the existing home sales number, for instance, it was up almost 40% in 6 months. Now, it gave back about 17% of that in the last report, but the net of that is up. Home sales are up 15% year over year in the existing home sale numbers. So on balance, sales are up. I mean, there has been a bounce.
And this shadow inventory, bottom line, should we be worried about that or no?
It's an ongoing drag in that it's an argument against housing starts picking up as much as sales. There's still clearly a glut of housing, so as much as sales pick up, starts should be weaker, clearly, and it starts
new homes you're talking about,
in terms of new home construction, and housing is not going to be a big plus for the economy because of the big glut, but at the same time there probably is some potential for housing to add to growth.
Okay, Jim, thanks so much, and of course a lot of people here are very curious to know what's going to happen in the housing markets these days. Jim O'Sullivan, the chief global economist for MF Global.